This video is probably going to be hands down one of the most important videos that you're ever going to watch on finance on all of YouTube. The advice that Warren Buffett gives in the video that I'm about to play is how I turned my portfolio from $0 4 years ago to over $670,000 right now. The advice is crazy. There's a little bit of context that I have to give you guys for about 2 minutes so that you understand what he's talking about, and then you're good. So here we go. So here's what we need to look at right here, okay? It's gonna be about the S&P 500. This is since 1960 to current. S&P 500 ran from about $70 a share all the way to $6,000 a share. Here's a good chart right here of history of stock market crashes in America. And I want you guys to understand this for a reason. I'm not trying to scare you. 1929, massive crash, okay? Kennedy got assassinated. We had the dot-com bubble. We had Black Monday. We had the 2008 financial crisis. We had COVID happen. There's a lot of things that have happened in the world where we thought the world was going to end, but it actually didn't end. We pulled through and we're bigger, better, and stronger right now. So Warren Buffett is going to suggest that you buy into the S&P 500. That's the 500 largest companies in America. Here's the portfolio weight. For example, if you put $100 into the S&P 500, you would get $7.20 of Microsoft, $6.99 of Apple, and the list goes down through the 500 companies. So these are all the companies right here that you're going to be buying into when you buy into the S&P 500. So if you believe in America, you think it's going to be bigger, better, stronger, more profitable in the future, this might be an investment for you. I have a lot of money in the VOO index fund. The expense ratio is very low, and this is one of the best ways to get exposure to the S&P 500.
Let me give you a figure that'll blow your mind, I think. I bought my first stock when I was 11 years old. It was the first quarter of 1942, shortly after Pearl Harbor. I spent $114.75. Three shares, $114.75. If I put that 114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today.
Oh man!
Well, it's
okay.
But I just want your audience to think for a second.
Okay.
The answer is about $400,000.
Oh.
So if I, as a little kid, had taken that $114 I'd saved on shoveling snow or whatever I'd done, $400,000 today, one person's lifetime. That's America. That isn't me. You know, it is the huge tailwind the American economy gives to any equity investor. Now, the market's gone down many times during that time. People have panicked during that time. Headlines have been terrible. You know, it looked like we were losing the war when we first bought it. But America is a powerful economic machine that since 1776 has worked, and it's going to keep working. Now, you don't want to buy to hold for a year. You don't want to buy with the idea that you could sell it in 2 years or 3 years, necessarily make money. You could lose money that way. But if you buy it for 10, 20, just keep buying the S&P 500 index and forget about all the other nonsense that's being sold to you, because I'll guarantee you one thing about the stuff being sold to you: it will carry bigger fees than what I'm talking about.
Yes.
Yeah.
And there's no reason to think that we don't know if it's 400,000, but that same sort of process or returns won't happen starting right now.
The S&P 500 companies have earned well over 10% on equity, often 15% annually for years and years and years and years. They've done it with Democratic administrations, with Republican administrations. Now, you get money compounding at that kind of rate underlying your investment, and you get a diversified group of that. I mean, you're going to do well.